Hello everyone. When learning about investing, many people come across the term ETF, which stands for Exchange Traded Fund. ETFs have become increasingly popular because they offer flexibility, diversification, and accessibility for investors of all experience levels. At first, ETFs may sound complicated, but the basic idea behind them is actually quite simple. In this video, we're going to explain what an ETF is, how it works, why investors use it, and how it fits into long-term investing strategies. By the end of this video, you'll have a clear understanding of ETFs and why they have become one of the most widely used investment tools in today's markets. So what is an ETF? An ETF, or Exchange Traded Fund, is a type of investment fund that holds a collection of assets such as stocks, bonds, or other investments. Instead of buying each asset individually, investors can buy a single ETF that represents many investments at once. ETFs are traded on stock exchanges, meaning they can be bought and sold throughout the day just like individual stocks. So why were ETFs created? ETFs were created to provide investors with a flexible and efficient way to invest in diversified groups of assets. Before ETFs, many diversified funds could only be traded at the end of the day. ETFs allowed investors to trade instantly while still benefiting from diversification. This made investing more convenient and accessible. So how does an ETF work? An ETF holds a basket of investments that follow a specific strategy or track a particular index. When investors buy shares of the ETF, they are buying a portion of all the assets inside it. The ETF's price moves throughout the day based on the value of its underlying investments and market demand. This structure allows investors to easily gain exposure to many assets with one purchase. So how is an ETF different from a mutual fund? The main difference between ETFs and mutual funds is how they're traded. ETFs trade throughout the day like stocks, while mutual funds are typically bought and sold at the end of the trading day. ETFs often have lower fees and greater flexibility. Mutual funds may have minimum investment requirements, while ETFs usually do not. So why do investors use ETFs? Investors use ETFs because they offer diversification, lower costs, ease of trading, and transparency. ETFs make it simple to invest in broad markets or specific sectors without picking individual investments. So how do ETFs reduce risk? Because ETFs usually hold many different assets, they spread risk across multiple investments. If one asset performs poorly, others may perform better and balance it out. This diversification helps reduce the impact of individual losses. So, can ETFs lose value? Yes, ETFs can lose value. Since ETFs track markets or groups of assets, their prices rise and fall with market conditions. While diversification helps manage risk, it does not eliminate market fluctuations. So what types of ETFs exist? There are many types of ETFs. The most common types of ETFs are stock market ETFs, bond ETFs, industry and sector ETFs, international ETFs, and commodity ETFs. This variety allows investors to build diversified portfolios using ETFs alone. So how do ETFs make money for investors? ETFs can generate returns through price appreciation, dividends from stocks, and interest from bonds. These earnings are typically passed along to investors. So why are ETF fees important? ETFs charge management fees that affect overall returns. Many ETFs have very low fees compared to other investment products. Lower fees allow investors to keep more of their profits over time. So how does someone invest in an ETF? Let's look at a simple example of investing in an ETF. Imagine someone named Jordan wants to invest for long-term growth. Jordan opens an investment account with a brokerage firm. Next, Jordan researches ETFs and selects one that tracks a broad market index. Jordan deposits money into the account and purchases shares of the ETF. From that point on, Jordan owns a small portion of many companies within the ETF. Jordan can continue adding money regularly to grow the investment over time. This simple process allows for diversified investing that requires minimal effort. So how do ETFs fit into long-term investing? ETFs are commonly used for long-term investing because they offer diversification and flexibility. They allow investors to easily adjust portfolios while maintaining broad market exposure. Many long-term strategies rely heavily on ETFs. So, are ETFs good for beginner investors? ETFs are often recommended for beginners because they are simple, diversified, and affordable. They reduce the complexity of selecting individual investments. Many investors use ETFs as a foundation for building wealth. So, how do investors choose an ETF? When investors are trying to decide how to choose an ETF, they typically look at what assets the ETF holds, the fees charged, the investment strategy, and long-term performance. Choosing ETFs that align with goals is more important than chasing short-term gains. So how often do ETFs change their holdings? Some ETFs track indexes and change holdings when the index changes. Others follow specific strategies that may adjust holdings regularly. The frequency depends on the ETF's design. So, can ETFs be used for income investing? Many ETFs focus on income-producing assets such as dividend stocks or bonds. These ETFs provide regular payments while maintaining diversification. This makes ETFs useful for investors seeking income. So how do ETFs compare to individual investments? ETFs offer diversification and simplicity compared to buying individual stocks or bonds. Individual investments may offer higher potential gains but come with higher risk. ETFs prioritize balanced exposure and risk management. So why have ETFs become so popular? ETFs have grown in popularity because of their flexibility, low costs, and ease of use. They allow investors to build diversified portfolios efficiently. Their transparency and accessibility appeal to investors worldwide. So how should beginner investors think about ETFs? Beginner investors should see ETFs as versatile tools. They can be used for growth, income, diversification, and long-term strategies. Understanding ETFs helps investors make smarter and more confident investment decisions. An ETF is an investment fund that holds a group of assets and trades like a stock. It offers diversification, flexibility, and lower costs, making it a popular choice for many investors. ETFs can support both short-term and long-term investing goals while helping manage risk. By understanding how ETFs work, investors gain another powerful tool for building a strong and balanced investment portfolio. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and check out our channel for more amazing videos that can help you grow your investment portfolio.